What's up, guys? It's April 23rd, 2025. We're almost done with the month of April. 7 more days left, a few more trading days left. We had a cool day in the markets. We had a gap up. We had two tradable legs within the first hour, and then we went sideways for the rest of the day. So let's talk about it. We broke out here. This was a trading range. Market cycle resets. Could say the leg count starts up here, but I'm gonna reset it because we break out. Leg one. See this tail? See that tail? That's a pullback. So leg one, pullback, leg two, pullback, leg three, pullback, leg four. Any leg past leg two, the probabilities for trend continuation go down. But there's some stipulations to that. If the leg two has enough momentum, it could be considered its own second leg. It can get its own second leg, excuse me. So here's an example where we have a trading range, the market breaks out. So this is the reset. So leg one, pullback, leg two. 27, 28, it's not 3 bars in a row, but it was strong to get its own second leg down. And it does right here. Same situation for 31 and 32. And you can also see overall that the bear's momentum is shrinking. So we restart the momentum here. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. And finally, bar 34 didn't have enough juice to get its own second leg. I say it didn't have enough juice, but the tail on 35 went one tick below 34, so on a smaller time frame, it did get its own second leg. So why was that? Okay, yeah, so I don't even remember where I was going with that. So leg one, pull back, leg two, pull back, leg three, pull back, leg four. Second leg, the probabilities for trend continuation go down. Okay, yeah, now I remember. So even though I say the probabilities for trend continuation go down after second leg, we have to be cognizant if that third leg can have enough momentum to get another leg down. So I wouldn't trade. I would trade this. I was actually looking at this. I didn't take the trade. This is the way I would trade it. I would put a limit order here. I'd get filled there. I'd scalp out there. And that's me trading a second leg into a third leg. Probabilities for continuation go down below 32, but it does in this scenario. The only trade I took today was I shorted the high of 26 and I passed a funded account. I just kind of scaled. I saw this. I was like, oh, this is a nice breakout. 3 legs down. Leg one, pull back, leg two, pull back, leg three. So we're gonna go sideways on a smaller time frame. There's 3 legs down, trading range behavior. 26 is the first reversal, so I shorted the high of it, and then bang, I passed the funded account right on these 2 bars. The range was big today, so yeah, that was 30 points. I had to make it was I tried it with Tradeify because they changed their payout rules, so I wanted to see what they're about. So, anyways, we're talking about second legs, probabilities. We trade the stock market, and when we trade the stock market, we trade the probabilities within the stock market. The way to find out what those probabilities are is to figure out where we are in the market cycle, and then we match the leg count to the market cycle, and then what phase. The phases of the market cycle are breakout, channel, and trading range. A breakout is a sudden move in one direction. A channel shows two-sided trading. Or it's the first opposite bar, excuse me. The start to the channel phase is two-sided trading. So this tail and that tail shows two-sided trading because there wouldn't be a tail if bulls weren't willing to buy. So we break out, we start the channel, and that gets the second leg. Big second leg, trying to get its own second leg down. Now we're in the third leg, and that's trading range behavior. Look, bears fail to make a new low. Bulls take the rally up to the they try and get up. They try and get right back into this range, but there's more sellers sitting at trading range highs, which is around the EMA, and now we're selling off. Today we had a gap, or yesterday we had a gap up. Is that today's bar? That's today's bar. That's today's bar. Yeah, today we had a gap up, but really bad follow through. The last couple times that the market touched the EMA, we sold off. So we'll see what happens. We sold off, but that was before this big bull bar got put in. So we'll see what happens now that we have a big bull bar and we're trading towards the EMA. Here's a 15-minute chart. Here's that gap up. Really bad follow through for the bulls. Because with this type of gap up, bulls just want close after close after close after close. Instead, they were getting tails, and they made a new high tick on bar 3, but it closed bearish, so not good for them. And then we have a few trend line breaks. So there's a few ways to count these legs. Just to be easy, I counted 2 legs. Leg 1, pull back, leg 2. But if we're gonna look at it from a granular perspective, I don't even know if I said that right. If we zoom in on it, leg 1, trend line break, leg 2, rally, but it doesn't make a new high instead of a new trend line. Instead of there's a new trend line break down here, wedge bottom, it rallies, failed to make a new high again, and bears get a good bar closing on its low. No bear gap, bad. So that's not good. That's just, this is no bear gap, so there's not too many trap bulls. Then we get follow through here, and then bulls are willing to buy the range lows, but there is a gap. So now we know bulls are trapped, and that gets its own 3 legs down. So let's just say right here is the trading range, breaks out like 1, pull back, 2, pull back, like 3, or you could say, well, there's a tail. So yeah, like 3, pull back, like 4. We're gonna go sideways for the rest of the day. When we have a big gap up, the daily expectation is generally a tradable leg within the first hour. So tradable leg within the first hour. Yeah, right there, 2 bull legs. I would have liked to have bought that bar and caught this second leg up. Gap up, leg 1, pull back, leg 2, and then we go sideways for the majority of the day. And that's what happens here. We went sideways, we went down, we sold off to about the 50% mark. A little bit deeper than the 50% mark, and then we went sideways. Big gap up, bar 1, small bull bar, but it shows us the bulls are buying highs. Bar 2 actually breaks the trend line and creates its own second leg. So it breaks the trend line and then it rallies. So there's a leg 2 in bar 2. Bar 3 is an inside bar. Tail closing above its midpoint, but there's a tail in the low as well. Bar 4, good bull bar closing on its high, but it's not breaking out of too much. Bar 6, you can see that the bulls that bought the high of 5, it rallies and sells off, so they're underwater. They're going to buy more, and they're going to get out at their original price or a little bit higher for a small scalp. So they scalp the second order, they get a break even for their first order. Where are we? This bar 6, bar 7. It's a trading range bar, has a small bear body, very big tails. Same thing with 8, small body, big tails. Bar 9, again, trading range bar. So it's more trading range bars than trending behavior. Bar 10, sells off and rallies, closing around its midpoint, closes bearish. And we have that second leg for the bulls. It could be the third leg, to be fair, because leg 1, pull back, leg 2, pull back, leg 3, because this is the high. Bar 7 is the high. There's a few ways to count this. It's messy. There's a lot of trading range. There's a lot of overlap. Bar 11, sold off, rallied, closing on its high, but has a tail, so there was 2-sided trading in that. And then we see bar 12. Bar 12 is a good bull bar closing on its high, but we have to start to ask ourselves, are we going to get follow through? Every time we come around the trading range highs, we go more sideways to down. So what do I mean by that? Rallied, down. Rallied, went down. Sideways, went down. Rallied, bar 13 prints, but it doesn't break out of too much. The bull bar closing on its high, and then bears finally step in at trading range highs. Third attempt to get higher. Leg 1, pull back, leg 2, pull back, leg 3. Many ways to count this. It is a trading range because now there's already a bear channel starting on the high of 7 coming down, but now there's definitely a bear channel here. 14, 15, 16, 17, and 18. That's 5 bear bars strong to go 1 tick below 18. We can see that with 19. Leg 1, pull back. Leg 1. Leg 1, sells off, breaks at leg 2, pull back, leg 3. That's a tricky count. If you want to keep it simple, we could just count from opposite bars. So leg 1, pull back, opposite bar, 19. Leg 2. Leg 2 starts to break out below the EMA and below bar 2, so that could reset the leg count, market cycle reset. Leg 1, 26, first reversal, so leg 1, pull back, leg 2, pull back, leg 3. And there's 4 legs there. 33 is an opposite bar, but it's still within the trend line. No trend line was broken. So let's talk about this price action real quick because there's a few things going on. We get the breakout, but these bars have tails. Leg 1, pull back, leg 2, pull back, leg 3. That's why I thought this was an acceptable short above 26, because it's a breakout. There's gaps here. So we know bulls are trapped that tried to buy the low. They got trapped there. And then there's three tails. So that tells me, okay, we're in 3 legs on a smaller time frame, and that pullback can start to come soon. It does with 26. So I took it. There's your 3 legs on a smaller time frame. This is the 1 minute. leg 1, pull back leg 2, pull back leg 3, pull back leg 4. This is bar 26, which was the first touch of the EMA on the 1 minute chart. So I sold right around here, and then I got filled right around here. You guys see how the market cycle is, price action is fractal. So there's big market cycles happening within smaller market cycles. Because this was a whole market cycle, 3 legs, 3 pushes, training range, and we break out. So 26 and 27 could also reset the breakout. Reset the market cycle. However, let's just talk about it from like this perspective. So market cycle reset, breaks out leg 1, pull back leg 2, pull back leg 3, pull back leg 4. The expectations for a gap up is a tradable leg within the first hour and then sideways behavior. We have the tradable leg. Now we have a big up, big down. That's screaming trading range, and that's what we got. 36, bears make a new low but can't close a bearish bar. Rallies, trapping bears, closes far above 35, and then we get a 3-bar bull microchannel of 37 and 38. First touch of the EMA, it sold off, but not to a new low. Not enough bars below the EMA, and getting short is going against the momentum. There's 3 types of trend line breaks. There's here, bears want a new low. There's here, bears get equal low, it's a double bottom, and then the third option here is a higher low. That's what the bulls got. Is here's the higher low. So leg 1, pull back leg 2. 43 breaks the trend line, so that's also leg 1, pull back leg 2, pull back leg 3. 41, bull bar closing on its high. 42, breaking out above the EMA, closing on its high. More body than tail. That's good. That's a trend bar. But then look at the tail on 43. That's a problem because it sold off and it broke the 42 low. So now we could be in that third leg. Leg 1, pull back leg 2, pull back leg 3. 44, bull bar, but it has about equal tail, equal body. So trailing range behavior, and we start to go more sideways. 48, let's see. So the market rallies, so right around here at the swing high of 27. Looks like there were more sellers for the moment, and that was a good scalp down. 48, bear bar closing on slow. 49, has a tail, so bullish tried to rally. It reversed, trapping bulls. And then bar 50, it's a bear body. However, it's testing right here. It has more tail. If you guys heard that sound, I just got filled on a trade. I don't like the approach to it, but we will see. Here's the trade. Oh. So I'm looking to get 1R of this, but I don't like how we just bounce off the EMA very quickly. I might just cancel it, actually, to be fair. Yeah, I closed it. It started to sell off, so I just didn't like how we had multiple legs up, so I'm counting leg 1, pull back leg 2, pull back leg 3, even leg 4. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. And I just don't like this bar, how it sold off in reverse. I think I could get stopped out. My stop was down here anyways. Right now it's starting to bounce and go sideways, but there's always the next trade, so that's okay. Where were we? So here, 51, sells off, rallies, closing below the EMA. Not the best situation for the bulls, but it is a bull bar. And then 52, inside bar. I think it's best to be flat. 53, bull bar closing on its high. 54, bad follow through, has more tail, and then we go more sideways. Then we get a really weak bear channel down. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. 4 legs down, but every time bears make a low, it goes sideways. New low, sideways, new low, sideways, new low, sideways. And then rally, we close on the EMA. Trading range behavior. So we're coming up to 20 minutes. I want to talk about the measured moves. And yeah. So here's a measure. So the way I view the markets is through breakouts. The way I do the measured moves is how trades I used to take. I used to take 3 bars, wait for a pullback, and take that. So I showed those. I used to trade trading range breakouts. So reverse. Let's reverse. Hold on. So here's more than 3 bars. So let's say I take these 3 bars here. Then I put it at the bottom of the pullback. So that's one way I do measured moves. That's a leg. That's how you measure a leg. Even if I didn't enter here, that's where the leg starts, because that's where the spike for the second leg starts, and you can see 1-to-1 was met of that spike. Another way to do measured moves is if you're looking for a trading range breakout, you can take the low of the trading range, so bar 2 is actually the low of the trading range, and the high of the trading range, and project the where you think the breakout's going to go, so to the downside. So that's another measured move. The way I personally trade is which could evolve in the next few months, because I have been working on a few other systems, but I'm not deploying them yet. Which could be, I look for breakout bars that make 1R, and then I set a limit and I scalp 1R. So each one of these trades, they're all revolving around breakouts. It's just I'm transitioning into way more of a scalper, because it's, from a system perspective, it makes more sense to scalp than swing. I'm more than comfortable scalping the swing setup, and that's kind of what these measure moves are going to be about. So let's do this. Let's do the micro channels and leg breakout or measure moves. So here's a leg, you get that, boom, okay. Here's another leg, right here, 3 bars. If you put that to the pullback right around here, you get stopped out. That is also a measured move. We have another leg right here, put at the high of 19. 1-to-1 was met quick. Now we have another leg right here, put it at the high of 26. 1-to-1 was not met. Trading range behavior, you could be just shy of meeting targets. No 3 bars. Okay, we have 3 bars here. 1-to-1, put it here. That's met. We have a lot of bars right here, but now we're trading into that third leg, and that fails, and you get stopped out. Where is another 3 bars? That's the only 3 bar setups we have here. You could sneak a 3 bar. That's a sneaky one. I don't know if I count 58, but it did close bearish. So put at the high of the pullback, 1-to-1's met. If you were not going to short the bull bars, you'd short 63 and then sit through sideways and then be out for like 1 point. So the risk to reward is not good for those trades. Now we have trading range breakouts. I only see 1 right here. So that low of 2 to the high of 14, that is. High of 7, high of 14. 1-to-1, that's not met. Okay. Here's another trading range I just spotted. 1-to-1, that's not met. And then this is the way I would trade. These are the setups I would look for today. I would take bar 1, get filled here, scalped out. There's a good chance I'd take oh, never mind, that didn't make 1R. I would take 16. I don't know if I'd get filled. If I did it fast enough, I would get filled on 19 and tagged out. So those are the type of trades I like. Oh, 27. I saw this one. I like 27. I didn't take it though. So I would get filled out pretty quick. Does 36 make 1R? So 36 makes 1R, but the problem with 36 is there's already a pullback in it. I'm looking for a first leg, a sudden move in one direction. Maybe I'm stubborn and I leave the limit order there. And if I do that, I actually would take a loss. Oh, no, I wouldn't. Makes 1R, filled here, out there to the tick. That's a sketchy one, so that's up subjective. 48 makes 1R quickly. $1R, get filled on, what is that, 53, gets 1R at 60. That's a pretty big drop. I'd have to sit through a lot for that. This 59, get 1R. 59 would work. 59 would work, but I'd have to sit through this entire thing. I don't know if I'm willing to do that. All right, guys, that's just about 20 minutes. Hope you guys are doing good. Again, I appreciate the question you guys are asking me in the Discord. Someone asked me to go over the measure moves slower, so that's why I did it like this. Let me know if this works out for you. We're going to keep talking about the market cycle resets for a couple more videos, then we'll re-engage. Something I want to say, I look at leg count and market cycle reset, and market cycle. If you're trading the market cycle, you're automatically counting legs. It's kind of like a 2-for-1, but it's always good to be cognizant of fractal legs. Anyways, guys, if you learned something, share the show. Don't be a hoe. I appreciate you guys. To all the new members, thank you. To all the subscribers, I appreciate you. And just for the record, I would have got stopped out. I would have been stopped out pretty soon here. So avoided a big loss. And yeah, I'm going to be training the overnight session, and I'll be training tomorrow's session and the session after that, and after that, and after that, after that, after that. All right, you guys have a good one. Talk to you later. Thank you for your time. Bye.